Good day, traders. Richard Jacobs here, and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we reflect on the trading week that's passed and also form some views and perspectives on what we think the market's going to be doing in the week ahead. Now, if we start off and just look at what's happened in the week that's passed, you'll recall in last week's video we highlighted these two candles here with they're small candles with a bit of a tail to them, and what we'd highlighted is that this was actually we'd see the market push up and then start a retracement, and once it put in this candle here specifically, we actually said, look, the stochastic is oversold and is potential for a move to the upside over here, although this is a very shallow retracement. And interestingly enough, there was not much in the way of previous price structure support. So we said this was an unusual place for the market to continue from. And indeed, after the first 2 days, we saw the market put in a little rally, and then it just broke back into that retracement down into the downside. So what we're seeing is the market's a much deeper replacement. The retracement is playing out in the market at the moment, and we've had a pullback all the way into the 61.8 level right here. Now, for our daily subscribers, we did then subsequently highlighted this zone between 50% and 61.8 as an important zone for the bulls to maintain the market, for them to get back on their feet and try and push to the upside. At the end of last week, we had this candle printing here, which is not quite a reversal candle, but very interesting to see. We've got a long wick to the upside, we've got a long tail to the downside, and the market pretty much closed very close to where it opened on the day. And that's really reflective of quite a bit of indecision in the market in terms of buyers and sellers struggling to gain dominance and ascendancy. So certainly some uncertainty playing out at the moment, and we have a stochastic that is well oversold as well. Now, does this mean necessarily that the market will go to the upside of the oversold stochastic? No, it doesn't. As you'll know from previous analyses that we have done, a stochastic can remain oversold for quite a lengthy period of time, and certainly we could see further downside playing out over here. Now, again, we're going to maintain our view that this 61.8 level, which comes in around about the 46,500 on the index, is an important level for the bulls to try and hold the line, for lack of a better word. If we should see a deeper retracement, certainly we could see a deeper retracement, and we could see the market continue to the upside. That can happen, but we start getting wary once we break through this 78.6 retracement level, which comes in around about the 46,000 level. Once we start playing in this zone here below the 46,000, couple of things. We're going to have a deeply oversold market in all probability, and certainly there could be a continuation move to the upside. But once we move below the 28.6, we close below the 28.6, I'm more inclined to view this market through the lens of a potential rollover. In other words, once the market starts pushing through here, there's a greater, or the probability of it breaking further down to the downside and breaking through this previous price structure level coming in here at around about 45.5 and actually breaking the uptrend is that probability increases relative to the probability of a continuation move to the upside. So we find ourselves going into this week in a very interesting position, as the market could move in either direction. Either we're going to see the bulls really find their feet, rally, and push this market back to the upside in a continuation move of these oversold conditions, or we're going to see them capitulate and the market roll over and break or start to break to the downside. So we're going to watch that, watch the price action very carefully here. It could really go either way based on this price structure action. If we look at our volatility measure, which is the normalized average true range, very interesting to see that in the last 3 days of last week, we actually finally starting to see a bit of a rally playing out here as potentially volatility starts coming back into the market. We're not too excited yet, because in absolute terms, these volatility levels still remain low, and we've had previous rallies over there and over there that really haven't panned out. So again, we're going to keep an eye on this measure, and it's important for us to actually see this volatility continue to increase. In which case, that would be a very good situation, especially for trend traders, intraday trend traders, etc. Because really the lack of volatility in our markets been one of the causes of trend trading being exceptionally difficult over the past 5 or 6 months. Right, so that's the price structure. Let's, as we always do, switch over to some of the other international markets to see what's happening on that front. Okay, let's start off with our old friend, the Rand dollar exchange rate. And weekly, we've got an unchanged situation. So nothing much happening on that front. We've still got the strengthening trend well intact. Sorry. On the daily, we've also got this this downside or strengthening trend that is continuing, as it's I mean, the Rand is exceptionally strong at the moment. And that's really adding to the case for a deeper retracement further downside in the local markets. At this point, we'd have to see a break or move back up in a break of the 1365 level to start really getting excited about upside or weakening trend in the Rand. So all eyes on the downside at the moment. And interestingly enough, we are actually getting close to a continuation move on the weekly chart. If we get a weekly chart close below 1243, call it 1245, at the moment we're at 1273. So on the Rand side, we're really seeing downside impetus playing out over there. If we switch over to the US markets, the upside, it's all upside over here. It's continuing to the upside. This market is just continuing to hit new highs and higher highs. And as you can see, this has been the playoff that's been evident in the market over the, call it, most of this year, to be honest. But there's been this playoff between a strengthening Rand in quite a few situations versus a strengthening S&P. And those opposing forces have caused a lot of the compression in our own local market. We switch over to the gold. Gold's quite interesting. I mean, we've got the move to the upside still intact on the weekly, and also on the daily, where we've got continuation to the upside. So gold is actually, there's a bit of risk off evident in the gold market, in the sense that our expectation would be that with gold pushing up, people are pushing their money into the gold market and taking some risk off the table from the equity side. So this is adding to the case for further downside on our local markets. And if we switch over to oil, oil again on the weekly chart, we've got this continuation move happening to the upside. On the daily chart, we had that break of structure to the downside. We had a retracement, and we're in a continuation to the downside. So oil is, call it market bearish at the moment. So some mixed signals, but on balance, it's really only the US market which seems to be holding our market up and preventing it from pushing into that deeper retracement. So if you juxtapose that with what's happening on the price structure side, it does appear that there's a case for a bit more downside here in terms of a deeper retracement. So we wouldn't be surprised as this week starts and that we get this move down to the downside. But as I said, it's going to be critical if we move below this 46,000 level. We're gonna really start perhaps changing our lens to a more bullish, more bearish focus, because the potential for a rollover and break to the downside in the market does increase. So that's the top 40 and what we see happening, or at least at the start of the week ahead. We do have a trading opportunity, which I thought I'd share with you guys as well. So let me pull up that chart and we can have a look at that. Alright, so what I have up on the chart is a daily, or up on the screen is a daily chart of Steinhoff, SNH. And what's been interesting is that over the past couple of months, we've really seen this stock start moving into a nice little uptrend, pushing up, forming higher highs and higher lows. And what we're focusing on today is this upside, this last move up here, this break up, because what we've seen is we've seen a nice retracement back into previous structure coming in around about those highs over there. And from there the markets rallied up on Friday and put in this candle here, which is a fairly bullish looking candle, closes very very close to the high of the day. At the same time, we have the stochastic, which has put in a bounced off this oversold level. It's actually put in a lower low. If you look at the swing low level there, that's a lower low on the stochastic. At the same time, we have a higher high forming on the price side. So that's really making, which is indicative of bullish divergence. So it does look like this stock wants to continue to the upside over here. And if we start setting some targets about where we think that price is going to move to, there's a couple of ways we can do this. We look at this leg here, this call it this impulse leg to the upside, and we're going to do just a one-to-one harmonic projection over there, and we see it pushing up all the way towards that 77 rand level. And if we look at previous price structure, going all the way back to December, between the higher high and the highest close, we've got this zone, let's call it this target zone, coming in between 76 and 77. And as you'll know, having seen some of these trade setups, we also look for some additional confluence using our Fibonacci's. And if we do a projection of that last leg of the move, the 127 projection level is something that we use quite often in our trading. You'll see that a 127 projection of that move also comes in around about that zone over there. So call it 76 to be conservative. So let me just clean this up. So our expectation is that with this continuation move starting out here, if the market were to break through this high watermark here, which comes in at about 71.81, we could see a move back up to 76. So we would construct a trading opportunity with targets set just in front of that 76 level, bring it down to about the 71.81 or the break of structure, the break of the high, sorry, and we'd set our stops below this swing low. It's probably slightly less than a 2-to-1 on the reward to risk, but still a decent looking trading opportunity to the long side on Steinhoff here for you guys to consider including in your setup portfolio. So guys, that's the weekly perspectives for this week. I hope you guys have a good trading week, and all the best. Be safe in your trading, and I shall chat to you next week. Cheers.